All right. I know you guys love these videos because some of you are going to come back. You're going to say, I told you so. Some of you are going to unsubscribe if you're mad. Some of you see the title and unsubscribe right away. But then some of you, you're really into this. You're overly bearish. So I have to tell you, I'm doing this. So I'm sharing my thoughts. I said it on stream and go check it out. We just did a 6-7 hour stream. So anything I'm saying here, as it updates and changes during the market, I'm doing it live. You could just go on the channel anytime during market hours. You'll see it pop up that we're live. So there's that, and I'm updating you with it. Things change and things will change. And even now, my prediction of this, I want to make sure you guys are aware of what happened today. I'm going to recap everything that happened with the market. It's still open right now. We're up about 727 points. But the main thing I'm going to discuss was some of the news that came out. And it was very negative, and we bounced. And this is something I talked about after the Apple news, which was kind of expected seeing what we did. So I do think the market is going to drop. Someone asked Monday. It's hard to say, but the big thing I'm thinking, I think we're going to see a gap down sometime next week. I said it on the stream, more towards Wednesday, Thursday, Friday. And if we don't, then I have two different scenarios. And now it's not to say I'm not trying to just throw out pinpoints to be right. This is, if you've watched the stream, it's multiple contingencies to see how I'm going to play. And if one thing happens, what can I expect? And it's so I don't get overly biased or overly weighted in one decision, and I'm not flexible. And this is volatility. This is a bear market, and this is why they're so difficult to trade, especially with the options. You know, we had some cool plays today, and even then, I lost on the puts. I still lost I think 4,000 on some of those profits, made 28 here. So I lost like 1,100 net between yesterday. But you're seeing, I'm realizing profit. I've talked about it on the stream. So again, if you haven't seen it, you're like, why are you showing that? But though it's in these markets, it's taking money on the way up and down and setting yourself, it's that balance, but taking the cash, being quick with it. So I'm going to have a bunch of videos this week. I'm going to update you guys on that, but let's talk about what happened in the market. The main thing that's going to crash the market, or that's going to cause a gap down, is the Chinese reserve requirement for their banks. I'm going to discuss that in depth because there's a big trend that anytime this has happened, it's not good. I related it on stream. It's like if you saw the Fed lower interest rates right now and cut rates or lower banking requirements to improve liquidity, the markets would panic. You saw what happened when Mnuchin even called the banks and the plunge. People are like, wait, why would you do that? So it could also be interpreted as positive, and there's a few reasons behind it that make it so important that I want to discuss. But a lot of people, the market reacted positively today. There's two things at play now. The sentiment, if sentiment continues positive, people could ride with that. But the news I saw today, I'm interpreting it as very bearish and very negative, and I'm going to share with you and show you guys through the chart. But now, beyond today, what happened? We closed down because of Apple yesterday. The market closed down pretty big, and today we gapped up. And nobody really knew why, but then it was the jobs report. So the jobs report came out, the non-farm payrolls, and it was like a double the expectations, which meant jobs are growing at a crazy pace. That meant the economy's strong. Wage growth was good. It was amazing, but that was bad news, actually. That should have been bad news because people would have said, well, if that means the economy's good, the Fed would be taking that data to now further hike rates. You see how that affects the yield curve and everything else with the markets and as it goes on. So that was a big issue if it was good, but it was amazing. And the market went down a little and then it shot up. That was actually, the first thing that happened was China announced this cut, and then the market dropped a little bit, but then the jobs report, it went down a little lower, and then it popped up, and then all of a sudden, people started interpreting it positively. And you can see that. We'll go here today. Let me pull it up for you so you could see a better visual instead of looking at me. Let's throw the extended hours on. So here's from yesterday. Again, that's the drop. Then we gapped up, and this is early in the morning when it started to happen. You started to see it went up and down, and this was in between. Both these gaps and rips are that. The first one was the China, and then the jobs report, and then the market went up went up with it. We started running up in pre-market, and then we gapped up here. So that's without pre-market. And this right here, I made a straddle play. I did an Amazon. I did $40 to like 600. It was a cool play, but I did a straddle here. We did this live. We pulled up as they did the conference. It wasn't a Fed meeting. It wasn't an active meeting with the Fed. It was literally, I was surprised. It was this global conference, and it was Jerome Powell, Janet Yellen, the past chair, and then the chair before her, Ben Bernanke, which was just insane. I wasn't expecting that. So it was good, and they talked, but pretty much what made the markets respond positively was that Jay Powell said they are looking at the markets, and they said there's something but with a softer tone, but he came off very dovish. There was some things I didn't like that could have came off as hawkish, and I ultimately think he kind of hinted that it is going to be hawkish, but rate hike odds were changing this morning right at the beginning from the jobs report. So I think they were also changing with China and the repo rate, or not the repo rate, their bank lending rate, that cut they made, which we're going to talk about. But that, the expectations now, people, they're dropping, but I still think he's hawkish. So that is what was responsible for the market. And then Trump came on, talked about the wall, and watch for that. I talked about in the streams and some of my videos. The government shutdown is having an effect. And I think as it drags on, that's going to get worse. But I think they pretty much made it clear that they either want this wall and they're going to get it or not. But again, what I'm saying of how this could affect even bonds, fixed income, and the risk of default. I know it's crazy, but as this drags on and the signals being sent, and again, it has an effect on the economy. That's why, because GDP and how much it costs, it's going to come into play. But there's a lot of debates on that. But now the next big thing too, I'm going to explain the China thing, but coming into next week, I'm expecting more volatility. I'm expecting something, whether, and there could be upside. That's why I'm saying you have to watch my other videos, because please don't forget, don't act like a few days ago, and even when it was dropping, I wasn't telling you guys earnings and think earnings plays. So you see I'm positioned for both ways, but I'm being positioned at the bottom on calls and selling at the high. That's how you make money. And I'm waiting for this. So I think tomorrow's going to be, or not tomorrow, but next week will be big. It's going to be the first real week. Everyone's going to come back. We're starting the pledge class. Everybody comes back from their vacation. People now are ready and willing to work and come back trading. So there's going to be more volume, I think. It's been kind of lack of liquidity. So even how that affects fixed income and everything else, I think that's going to be interesting. But now this relates to China. So here's the bank rate I'm going to show you. And now even like we're talking about with our holidays and stuff, they announced today that they're going to cut this bank lending rates, the cash reserve ratio. So think fractional reserve banking. It's how much banks have to have on deck to loan out to other people and stuff, and to lend it. And pretty much it's the, I thought they'd have a definition for you, but there's my definition. If you're not familiar with it, Investopedia is always better at explaining it than I am. So they dropped this, but they're doing it because it's going to be starting. They announced it today, and effective January 15th to the 25th is when it comes into play, because China is going to have the long Lunar New Year celebration. So their markets are closed, I believe, for like a few days or a week. And usually the US market rips during that. So that's where I'm like, but I'm going to share with you the bearish sentiment of why I think this can make the market crash. But that's something to keep your eyes out on for, because with China closed and their markets closed, it's, when markets are closed, people can't trade, people aren't getting, that's one less thing to worry about, essentially, unless bad news comes out. So we're going to see how that plays out. But now this is why this news is so important. They haven't cut this. This is just in the last year. So it looks like a trend. You're like, okay, nothing stands out to you. But look in the last 5 years, the only time they did this was in 2015, when China first started slowing down. That was the first flash crash, the first time they devalued, the first time people said anything of China slowing, and people even were in denial about it. And that's why we said China is the gray swan, because a gray swan, it's funny, someone made a comment, they said, you millennials, you guys can't even call it a black swan. They thought I was referring to a gray swan as a political term. No, a gray swan is a financial term, and it is saying that a black swan is an unexpected event. A gray swan is when an unexpected event occurs. it doesn't necessarily crash the market, but then it drags on, and later at another time, it eventually happens, just not when expected. That's why it's a gray swan, because it's like, it was unexpected at one point. Now it's kind of, so China and their growth has been expected, but that's why it's called a gray swan. But we're going to focus on the dates, but you go look on literally their history. China doesn't cut this. They cut this during periods of massive trying to increase growth. That's why they do it. And then once they reach places, they raise it. And you could see, you know, it makes sense. It's just like the Federal Reserve and rates. This is kind of their quantitative tightening, but also controlling their system. But they don't drop it. And again, 1998, take a look, 2000, does something look familiar? They've raised it a lot, so now they have room to cut, and that's what they're doing, ready, you know, to spur growth. But now look here, let's look at the dates in the stock market, because it correlates with the trade war. And someone said this could be a bias, and I understand this could be biased, and there's other things, but I'm telling you, if you pay attention to this and watch these, there is many push and pull contributing factors in how things are related, but they are related, and this is a liquidity event. This is screaming a liquidity crisis. This is screaming a problem. They wouldn't do this unless motivated, because it has effects on their monetary policy, their political policy, everything. So they don't just do this arbitrarily, and that's where you guys got to understand this data. It's filtering and understanding what data is important, when, and at what time. So here's April, and they did the first one, I believe, April 24th. 2014. Let me double check that for you guys. Yes. No, June 24th. Wait, hold up. No, that was the second one. So April, so this one was June 24th. China bank cut. I'm going to have to Google that. April 17th. Was it? As of April 3rd. I think. No, April 17th. Yeah. So April 17th and then June 23rd, I believe, and then October 9th. So they did it 3 times. So here is April 23rd. No, it was the 5th. 6th, I meant. Was it the 23rd? All right, someone's gonna have to double check it, but I had it up earlier. It's either April 7th or 2nd, so I don't want to confuse you, but either way, you could see again, and this is why I'm saying it's either going to happen, we're either going to go down this next week or sometime in the next few days, because this is how it's played out. Here's April 16th or the April 12th or whatever. You could see it got announced, or April 13th got announced. The markets gapped up a little bit, and then 3 days later, it came. Of course, my memory cut out. But you saw what happened. You know, they resolved this situation from there. That's when Trump's jawboning and whatever else worked. But then the next one was June 23rd, I believe. That's when they cut it again, and you could see here, markets gapped down, and we started to go down again. Again, more jawboning a few days later, and then the last time was October 8th. So again, it's like you're seeing some big drops, and again, that's why go back with news and try to remember. I've been trading, so this is why it stands out to me, and I've been following this, but there's the 8th. That's the last time they did this. And that's what started, you know, we saw what happened with the market and stuff going. And here you go. April, May, then they cut in June, then they held it for 4 months, and then they cut here in October, and then they just cut today. So that just happened today. But you see, you know, they've been holding, but this is rapid, especially when, again, they haven't done it, and they only did it in last time there was an issue. So now it's an issue. Apple's admitting the issue, and I think that's why it's interesting for them to announce that after Apple does, because I think this is just politics. I think both sides are announcing the trade war. People are seeing the effect, and now it's heating up. It's responding and taking action. So it's interesting to see, but that's where I'm saying I think the market's going to go gap down next week. Not necessarily crash, but this is going to have something to watch. Again, like I said, the Apple news, this news coming at the beginning of the year, it sets the stage for the rest of the year, in my opinion. You guys could come back to this video, I say 12 to 24 months from now. And this is going to come to light. I really believe that. This is something I think it's downplayed. It's going to have an effect. And like I said, in April and June, it could either lead to a bounce and more volatility. And like we said here, the market will usually respond positively. The Chinese stocks like BABA, this is liquidity. They get liquidity, but if it's not enough and it's short-lived, it's coming right back down. And usually I'm seeing with this market, we have so much coming into this next week. If the Chinese holiday helps the market, then yeah, that again, it got picked up before and saved it, but recently, if this gets bad, this is China showing stuff. So if more stuff goes wrong with the currency, oil, anything like that, watch out for this. But this is what I'm watching out for next week to see how other news events could stack onto this. The government shutdown, more developments with even the trade war and everything, but then also these currencies and what we saw. But don't let this weekend, make you cool down, or this 800 points distract. Don't let this distract you from the fact that, that sounds so crazy to say, but stay awake in it, stay active. Because I was even talking some of the plays I made today and some of the Amazon I sold, they were continuations from last week. It's just playing it, rolling, and understand what you're seeing here, taking it as it goes. But I'm gonna make some more videos for you guys that you'll have. We're gonna talk about a lot of stuff, strategy, options, more news, and interpreting what's going on. But this stuff's crazy. I love it. Subscribe to the channel. Monday, see you on the stream. See you for the rest of the weekend. Love you all. Peace.